Hello, this is Stephen Stanley with United Real Estate in Moorhead, Kentucky, and welcome to the October monthly market report. So let's do this.
Now let's do this!
So I'm going to start today with an update on pricing, and I want to begin with this quote from Bill McBride from Calculated Risk. I'll put it up on the screen. It says, "My sense is the Case-Shiller National Annual Growth Rate of 19.7% is probably close to a peak, and year-over-year price increases will slow later this year." So what does that mean? Well, buyers and sellers are out there seeing things like prices have peaked. Prices increases will slow later this year. It sparks questions and uncertainty. And what I'm going to bring for you today is some context and clarity or what's happening with prices and what to expect going forward. So let's start with a look at July 2021 year-over-year home price appreciation. This is the latest data that we have, and FHFA is showing that home prices have appreciated by 19.2%. CoreLogic showing year-over-year appreciation at 18%, and the S&P Case-Shiller Index is showing 19.7%. So this is very dramatic. This is an incredible home price appreciation. And as we look at this, it's largely due, as real estate professionals have been saying for months now, to supply and demand. We simply have not had enough homes on the market for the demand from buyers, and that causes prices to rise. So let's take a look at what this looks like across the whole country. This is our price appreciation map year over year for Q2 of 2021. Now, what you can see here is that the states in red have over 20% appreciation over the past year. As a whole, 17.4% for the United States, but you can really see how it breaks down by state right here. As you can see, Kentucky's at 15.6%, so pretty close to the national average. Now, what we're starting to see with the forecast for going forward and what experts are projecting going forward, and that's where I want to really clarify the conversation. And I'm going to start with this quote from Ivy Zelman. I'll put it up on the screen here. It says, "Closings are set to decline roughly 10% year over year in the second half of 2021, and home price appreciation is on the cusp of flipping to a decelerating trend." So what does that mean? I want to hang on that word decelerating for a moment, because that's where we really need to provide the clarity. When consumers see the word decelerating, they're immediately going to think, uh-oh, depreciation, and start to panic. But I want you to hear me loud and clear when I say that experts are not projecting depreciation. What experts are projecting is increased home price appreciation, just at a slower or more moderate rate. You understand? You follow? So that's where decelerating comes into the conversation, and it's really mission critical, if you will, to understand the difference between depreciation and a decelerating trend. So let me show you what that means. This is the estimated home price performance, and it's from Home Price Expectation Survey. And what we can see right here is that through the rest of 2021, home prices are expected to continue to increase at 11.74%. So that means continued appreciation. And what we also see is that not as massive as we've seen over the past year with the 18 to 19, almost 20% appreciation. So a more moderate pace through the rest of this year. And going forward, as we look at 2022, 2023, and beyond, we're seeing continued appreciation, but at a more moderate pace. 5.82% for 2022, and so on and so forth. So what that means is that home prices are not expected to decline. They're just expected to appreciate at a slower pace. So let me break that down just a little bit further. This is the expected home value change, and this also comes from Home Price Expectation Survey. So you saw that 11.74% appreciation for 2021, right? And if we average out the 5 years that I just showed you on the previous slide, the annual average through 2025 is about 5.7%. Now we know that from historical norm for home price appreciation has been 3.8% per year, but that historical norm is even bumped to 4.1% due to the price appreciation over this past year. So even the historical norm is climbing. And then cumulatively through 2025, home prices are expected to appreciate 31.8%. And if we add that up to the next 5 years. So home prices are definitely still rising, again, due to supply and demand, and not expected to decline. And so what's really important is that we help buyers in particular understand that buying now before home prices continue to accelerate is really, really important, especially since mortgage rates are still low. But we know that mortgage rates are ticking up some. We know that home prices are expected to continue to rise. So buying now, if you can find a home, is really mission critical to that long-term wealth advantage. And you know, we always say, if you could go back 10 years and do it again, would you buy another home? Because the value has increased exponentially. And most people say, well, yeah, I buy a home again. Actually, I probably buy 2 or 3. So that's the message that we really want to be sharing here, okay, is that home prices are not expected to depreciate. They're just going to be appreciating at a decelerating pace. The other question that a lot of people are asking about right now is, what about the fourth quarter, right? How is this year going to end up? So let's start off right here. Diana Olick from CNBC, she says, fall is usually the start of a slower season for the housing market, but nothing is usual in today's pandemic-driven housing market. Potential home buyers are seeing a slight rise in inventory and consequently rushing back into the fray. Now, I don't know if they're rushing back into the fray, but certainly people are noticing that. Mortgage applications to purchase a home jumped 7% last week from the previous week. And that is the highest level since April of this year, she says. So people are saying, hey, you know what? We want to get back in. We're seeing rising inventory levels, and forecasters are struggling with how do we forecast the remainder of this year. And the bottom line is home sales are very difficult to forecast right now because of these 3 lines. What this is annualized home sales from 2019-2020, and the green line 2021. And what you see there is that 2020 was nothing like a normal year, which we saw in 2019. So if we want to go back to a normal year, we have to go back to 2019 and look and say, okay, what did that look like? That was a normal year, because we know that what the pandemic brought. It brought this orange line here on the screen, the dip down, the rise back up. And realtors did double duty in the second half of last year when they packed all that business into a short amount of time after the lockdown. Many people, because of low interest rates, because of the needs of home changing, rushed back into the market, and it became this very abnormal year. More homes were sold last year than ever sold before, and we know the story of that. Well, we're about to enter a time in the latter half of the reporting season, the end of summer, into fall, and into winter, where we packed a ton of business, and we're going to be below that orange line. And folks are going to say, hey, you know what? We're down year over year. And you're already seeing that happen. You're down in home sales, and foreclosures are rising. So just realize that kind of situation that we're heading into. But the reality is we are beating 2019, which was a very, very good year in real estate, and the last normal year that we even can go back and look at. And you see right where I've isolated 2019, 2021 here on the screen, and you can see right where we're at. And so the reality is we saw 2019 being one of the best years in the last 10 years in real estate, and we're ahead of that right now. So that is a good thing. Now, the other big story right now is interest rates. No doubt we're starting to see some movement in the interest rates for a lot of different reasons. But I want to talk about that for just a minute. And I'm certainly not here today to say that the sky's falling and interest rates are about to shoot up. But I want to give you a look at what interest rates are doing so that you can be educated on this topic. That's why I'm your knowledge broker, right? So first, a quote here from Allie Wolf. The single biggest risk, she says, to housing is rising mortgage rates. It's a real possibility the next year could bring prices down. Further, other economic, financial, and confidence challenges could also result in a drop or flattening of home prices, but a drop or flattening in home prices is a far cry from the crash we saw during the Great Recession. So Allie Wolf saying, you know what? The biggest issue, the frenzy in the housing market, could be rising interest rates. It's going to be more expensive for people to borrow. Right now, the 30-year fix just jumped above 3%. It's sort of crazy that we're talking about rising interest rate environment and we had an average 30-year fixed of just over 3%. You see right here, 3.01% is recorded by Freddie Mac on their weekly survey, and that jumped up as they're starting to see indications of the Fed saying, you know what, we're going to taper soon. The word they've used is right now, actually. Sam Cater from Freddie Mac says this: many factors led to this increase, including the Federal Reserve communicating that it will taper its support to the capital markets. Time out there. That's the soon element. The Fed came out and said, you know, we've been buying mortgage-backed securities, and now we're going to start to taper that. We're going to start to pull back on that, and we'll do that coming up, the market starting to price that in. And he goes on to say the broadening of inflation and emerging energy supply shortages, which compound other material and labor shortages, So the issue right here is the economy is recovering, not recovering as quickly as they would like to see, but the Fed's saying, you know what, hey, we're going to start taper on what we're buying in the mortgage market. So that's causing interest rates to go up. Now, I think it's important that we realize that we're in a great environment now, right now. It will cost more to buy as homes appreciate going into next year, as interest rates rise going into next year. But nobody's calling for this sharp spike in rates. As a matter of fact, here's the latest projections in interest rates from Fannie, Freddie, MBA, and NAR. You can see here, somewhere around the middle to the third quarter of next year being about 3.5%. So we're just right at about 3% right now, 3.5% if we want a visual for this. We've got the Freddie Mac visual right here. You see the drop in rates through the pandemic and starting to inch back up. Freddie Mac saying by the third quarter being around 3.7%. Now, I don't know, I'm not here today to say that that's where interest rates are going to be. I don't think it's going to be 4% and probably not at 3.25%, maybe somewhere in the middle, and call it 3.5, 6, 7, maybe a little bit more. But no doubt interest rates are going to rise some. For example, if you've got a $400,000 loan that somebody may obtain to buy a home, and if they look at 2 3/4, which we've been at, the payment is like $1,633. If we go up to 3%, it's $1,686, right above that. Well, if the interest rates go up into next year, knocking on the 4% door, and that rate now allows you to buy a lot less home. And we don't want to convince anybody to do anything that they don't want to do, but we want to show them that as prices rise, as rates rise, it's going to cost more in the long run to buy a home and certainly to finance that home. So as I wrap up the October monthly market report, a couple of things I just want to mention. One, DS News came out with this quote. I'll put it up on the screen here. I thought it was very good. Home ownership is one of the fundamental keys to accumulating wealth in America, hence why it has been integrally linked to achieving the American dream. Not only can owning a home provide a roof over your head and a secure place to live, but because mortgage payments generally remain fixed, while rents may rise over time, a home can be a very effective hedge against inflation. See, inflation's being talked a lot about right now, right? A home is a very effective hedge against inflation because you have a fixed payment. It goes on to say, together, these features can give homeowners an enormous advantage over renters when it comes to accumulating wealth. The opportunity for home ownership not only is a shelter, right? We know the financial, non-financial benefits of home ownership, but it helps people build wealth, no doubt, all across this country. The question right now, with rising interest rates, prices going up, many people saying, you know what? I don't want to buy right now because I don't want to buy at the top of the market. But what people fail to miss is that its forecasters are not calling for depreciation in the market. I think there may be some deceleration of prices, meaning we're not going to stay at the appreciation point that we've been at, and we're going to see less appreciation, but not depreciation. You follow? The home price expectations survey just came out. If you look at a $350,000 home over the next 5 years, the purchaser of that home stands to gain just over $111,000 in gained equity based on forecast appreciations for the next 5 years. And when people see this, they're thinking, why would I buy at the top of the market? And they miss this piece. And they go, wow, maybe I should reconsider. So the bottom line is if you're considering selling your home, now's the time. If you're thinking about buying a home, now's the time. If you're on the fence, give me a call. Call me, text me at 859-509-1208, and let's set up a no-cost to you consultation to discuss this. Be sure to check out my free sellers and buyer's guide down in the description below and give me a call. Thanks for watching. Have a blessed day. We'll see you. Year-over-year appreciation at 18%, and the S&P Case-Shiller Index is showing 19.7%. So this is a dramatic dang it. And that fly must die. I'm gonna kill me a fly.